Hey guys! Welcome back to another video. I am Gwen Salmorin, the Millennial Breadwinner, and empower breadwinners to become generational wealth builders. And if this is your first time tuning on this channel, don't forget to click like and subscribe down below so you can be notified on the next one. So guys, have you ever wondered why interest rates differ? Diba, let's say nangutang ka sa credit card, yung monthly due mo pag di mo nabayaran, 2 to 3% lang siya every month. But then, if nangutang ka for a house or for a car, the interest rates go up from 15 to 20 or even 30%. So, if you want to know more, why is this happening? Tune in until the end of this video. So first, history muna about interest rates. Actually guys, alam nyo ba ang interest rate, it started way back 1754 BC. So yes, ganun na katagal yung concept ng interest rates. And it started with the Code of Hammurabi in which pinatupad yon ng 6th Babylonian king. And he said that if you're gonna take silver loans, you need to pay interest for it. And then, fast forward, 1764, na-solidify na tong concept na to kasi nung na-establish yung first central bank in England, pinagpatuloy na itong concept na to until today. Ano-ano nga ba yung tatlong gamit ng interest rates? So, una, this is the required rate of return. Number 2, the discount premium. And number 3 is the rate for opportunity cost. So, isa-isahin natin yan. Yung required rate of return, this is the return na nare-require ng any investor or lender na, sige, ipapahiram ko sa'yo yung pera ko, pero after ko ipahiram sa'yo, ibalik mo sa akin yung 10 to 20%. Required yon, and that will make me move forward in this agreement if madi-deliver mo siya or if you agree to deliver it. So, kaya siya tinawag na required rate of return. Pangalawa, discount premium naman. Discount premium, ito yung concept na, sige, I will lend you my money, I will let you borrow my money, but in 10 years, you will pay me 10,000 pesos. So now, what will happen is yung interest rate, we will use it to compute how much is the value of 10,000 pesos today. So, i-discount siya, no? And gagamitin yung interest rate na yon. And then, pangatlo is, dun tayo mas familiar, is for the opportunity cost. The opportunity cost, ang concept naman nito is, of course, the lender or the investor, instead of putting their money into another investment, they will lend it to you. So, there is an opportunity cost of letting you borrow the money instead of them actually investing it and putting it elsewhere. So now, balik tayo dun sa question ko na, bakit nga ba iba-iba ang mga interest rates? So, ang interest rates kasi hindi lang yan isang percentage. There are major components of it. Ano-ano yung 5 component na yan? Isa-isahin natin. So, first is real free interest rate. So, this is mostly related dun sa opportunity cost concept that we are saying kanina. Na ang interest rate is nandyan siya dahil nga there is an opportunity cost of lending the money to you instead of putting it elsewhere. The real risk-free interest rate concept is hindi niyan fina-factor yung inflation, which leads us to the second component, which is inflation premium. Of course, guys, no, kung doon tayo sa concept na uutang ka para to pay for a house, is the value of money today is very different 20 years ahead. So the lenders, no, they actually put an inflation premium dun sa interest rates na yon to consider that one. And then, pangatlo is the default risk premium. So, going back again to the example of, let's say you are taking a loan to buy a house. Of course, in 10 or 20 years, there are a lot of things can happen. And there can also be times na there could be default or hindi na siya mabayaran. So, kino-consider din yang factor na yan. And then, number 4 is liquidity premium. So, since nga the money is lent to you, the investor cannot use that money whenever he or she needs it quick. Hindi siya liquid, kaya meron siyang pinapatong na liquidity premium. So, number 5 naman, sinatawag natin na maturity premium. It's really more on consideration kasi nga, in 10 or 20 years time, the market rates can also be very different. So, those are the 5 components that can actually affect how interest rates are computed and can be passed on to you. So, kung makikita nyo guys, no, those types of interest rates, mas mababa siya, di ba, pag lesser yung risk, no, kung sure na mababayaran or possible na kung merong collateral. So, those are the factors that the lenders or investors consider, no, when putting an interest rate. So, hindi lang yan basta-bastang percentage. So, I hope guys, this help you a lot to understand what are interest rates and how it is valued. And if you like to know more about these things, click on the next video click on the next video and watch this one. Thank you for watching. Bye!